Good morning and welcome to the Bloomberg Daybreak Asia podcast. I'm Doug Krisner. Here are the stories we're following today.
I'm Charlie Pelletin for Doug Krisner this week. Asian stocks set to follow Wall Street higher as traders prepare for the U.S. election and key economic data ahead of the next Fed decision. We heard from Daniel Lam, head of equity trading at Standard Chartered Wealth Solutions. He spoke earlier with Bloomberg's Heidi Stroud-Watts and Sherry An in Hong Kong.
So, Daniel, do you see yields going much higher from there? Because it feels like there is still, as I said, that sort of investor anxiety given the level of uncertainty at the moment.
Well, we do believe that around the current level, it is quite attractive for the medium to longer term investors because the 10-year yield has gone up by roughly 60 basis points over the last 5 weeks or so. And we believe that is pricing in a Donald Trump or Republican clean sweep, right? And other trades that include such phenomena includes perhaps the small caps and also the U.S. financials. Okay, so all these are pricing in that scenario almost to perfection. So basically, for the longer-term investors, because of the Fed rate cut path is still very much intact in our view, that we believe the yields would gradually come down after the elections.
What I suppose is interesting is almost regardless of who emerges victorious from the election, neither candidate is really prioritising deficit reduction, right? Mm-hmm. So does that play into, this sort of uncertainty and the anxiety that we're feeling across bond investors?
Yes, that certainly does. But we do believe that they would need to be stimulating the economy first, right, before they... the deficit has been increasing for a long time, right? So it is a case of, in a way, trying to stabilize the current economic scenario before getting concerned about the medium to longer term issues. So that is likely to be the policy that they'll be taking. So that means, at the same time, gold is, our only overweight in terms of our level one asset class allocation. And that really plays into that scenario. We believe that under all the different scenarios, gold would be performing pretty well, right? Regardless of who wins. Because of what you said, the budget deficit, geopolitical tension, etc. Yeah.
Daniel, what about the Japanese yen? I mean, with U.S. yields rising, we continue to see it pressured.
Oh, the yen is because of the current political uncertainties that we're seeing. So that is probably going to be wobbly for a while, especially when you're going into the U.S. elections, right? Because going into the elections, you expect that the dollar would remain quite strong, okay? So two sides of the equation, dollar staying strong and political uncertainties in Japan. So dollar yen probably going to be going higher to around the 155 level, roughly. Right, before it can go back. BOJ is on a different path from the Fed. It's on a rate hiking path. And the fact that, the election results is as is means that the people, are concerned about the inflationary scenario. The laymen, in terms of the economy, they are concerned. So the BOJ is likely to be hiking. And that would help to narrow the interest rate differential between dollar and the yen, and dollar yen to gradually come back down.
So what do you make then of what happens to U.S. tech? Because I know that you've been watching that inverse correlation with the yen.
Yes. So basically, we have cited the dollar yen unwind of the yen carry trade as the major risk for U.S. growth stocks or tech stocks. Because if you look at the movement of the two since 2022, they have been basically very much, correlated, right? Perfect correlation. So the money that people use to short yen, the money that they get is one of that's used to buy these high-flying U.S. growth stocks. So if there were to be a sharp unwind like what we saw back in August, that can hurt the tech stocks, cause a temporary dislocation, so to speak. So given the long-term prospects for those stocks, if there were to be such a scenario, that would be a great buying opportunity for those.
tech giants reporting this week. What are your expectations for this earnings season?
Well, this earnings season, we believe, is likely to be pretty good. I mean, so far the companies have been doing quite well, so we're expecting that the guidance to be quite good as well for those. But of course, in terms of the AI or the tech stocks, semiconductor stocks, those that are more advanced in terms of for the advanced technology, those are likely to be doing better than those that are using less advanced technology in terms of the semiconductors. So there is likely to be differentiation there, but we do believe that such causes like dollar yen coming off, leading to the tech stocks to be under pressure potentially. Those are factors that people should be taking advantage of for the longer term investors.
Daniel, after the exuberance over the China stimulus package, we're now seeing some of those ETFs seeing some significant money being yanked out now. In fact, when it comes to large caps, one ETF seeing the biggest outflows from China since 2020. You talk a little bit about the sort of temporary reallocation from Indian funding, right? Does that mean when you look at China versus India, you're still preferring the latter while you kind of wait for more details on what happens with China stimulus?
Yes, because the latter is more of a growth, longer-term, consistent growth story. In China, we're not so sure, right? Because it depends on what is going to come out, further details of the stimulus package. People are waiting for that. That's why people are pulling money out, and money rotates very fast. They go to the U.S. for the Donald Trump trade, for example. So yes, we're preferring India for the longer term. But if the stimulus in China were to come out to surprise on the upside, then we can see another exuberance in China.
Daniel, really great to have you with us. Daniel Lam, who's the head of equity strategy at Standard Chartered Wealth Solutions.
I'm Charlie Pellet. Doug Krisner is off this week. Let's get to a conversation with Larry Culp, Chairman and CEO of GE Aerospace. In an exclusive interview with Bloomberg, he parsed through the issues lingering over the aviation industry. Here's Culp speaking with our own Haslinda Amin in Singapore.
Larry, when it comes to the aerospace industry, it's been settled with supply chain disruptions, supply chain issues and challenges. When will we see the end of those challenges?
Well, in many respects, it's all about demand. And we look out both in terms of demand for new engines under wing on new airplanes and the support that we provide the airlines for their existing fleets continuing to be strong really for the rest of this decade. It's a good problem to have, and we'll need to increase our output. We'll need to work with our suppliers to increase their outputs to us, I think every year, probably between now and 29 or 30 at a minimum. So it'll be with us for a while, but I think we're making a lot of progress.
The thing is, some had anticipated an end to the problem by 2027, but by the sound of it, it's going to be longer than that. Perhaps we could see a lost decade for the aerospace industry. Would that be a fair assumption?
I don't think we're going to lose a decade by any stretch. Again, I think given how strong demand is and the progress we and others, our suppliers, our airframer customers are making, we'll continue to drive output. Again, because the demand is so strong, we'll talk about the supply chain, but I don't think this will be a lost decade. I think this will be a very important decade as the industry recovers from the pandemic, modernizes fleets, expands fleets with more fuel-efficient aircraft.
But realistically, what can be done?
Well, it really, for us, is all about making sure we're the best possible partner, the best possible collaborator with our suppliers. The vast majority of the input challenges that we have, the shortages that cause us to be late on deliveries, really come from about 15 different suppliers across our supply chain. We have 550 engineers going in to work with those suppliers, identify bottlenecks, identify constraints, and really solving those problems so that we can drive better output from their operations, inputs into ours, and in turn to the airlines and the airframers.
Let's talk specifically about the latest supply chain disruptions and shortage, and that has to do with the castings of high-pressure turbine blades. What's the story there? When can that issue be resolved?
Well, I think there are a host of issues. Again, when you look across the supply chain that we're managing, we've got about 15 different suppliers across a number of different commodities, which are really where we're being paced. So I think in every instance, I really like the progress that I'm seeing. Teams collaborating on the shop floor, identifying the issues that are really the problem. It may be a process yield in some instances. It may be something as simple as staffing perhaps a second shift in others. But by working those problems together, we're driving better output. We had a small handful of suppliers just here in the most recent quarter where we increased our output sequentially by 18%, not year over year, but from the second quarter to the third quarter. It's that type of work, the cumulative effect of that type of work, which will help us.
So when it comes to the costings, that issue could be resolved in the next, give me a time frame.
I don't want to talk about specific commodities with specific time frames, again, because the demand curve steps up every year for the rest of this decade. So even if we were in a position where we had solved a particular shortage, there's going to be more demand, thus more output required next year. So we'll need to continue to drive those capacity expansions, those process improvements for quite some time. But I think we're fortunate to have that sort of outlook in our business.
The aerospace industry is also seeing other challenges. We're seeing faulty parts in planes still in service. How concerning is that for you?
Well, it's a high priority for us because some of that activity has actually involved engines. And just a couple of weeks ago, our Supply Chain Integrity Coalition issued a report, had a series of recommendations that we think will improve the safety and the security of the supply chain. Not many people appreciate that what we do is not only manufacture engines, but we support those engines for 20, sometimes 30 years over their entire life cycle. So the services, the parts, the repairs that we provide in the aftermarket are a critical part of what we do for the airlines. And we all need to make sure that there are no counterfeit parts in that supply chain. And that's a good bit of what the coalition's work was aimed to do.
Is there a sense, perhaps, that it is a sign that we've reached the limit of innovation on conventional aircraft, for instance?
No, not at all. I think that if you look at what we're doing, just say in the narrow-body segment with our LEAP engine, we're providing a generational step function improvement in fuel efficiency. It's part of the reason that demand is so strong, because airlines not only want to expand, they want to modernize because of that fuel efficiency, which also translates into real sustainability gains. We have been very public over the last 3 years about our next generation narrow-body engine, a program which we call RISE, which is really stands for Revolutionary Innovation in Sustainable Engines. So there will be new planes that come to market probably sometime in the middle or the latter part of the next decade. We want to make sure we're investing today in the technologies, the innovations that are going to provide the next step function improvement in fuel efficiency and thus sustainability.
Larry, we know that GE powers the 777X. Its delivery has yet again been delayed, extending that delay to about 5 years now. How confident are you that perhaps those planes will be delivered in 2026? What's the complication there?
Well, I think there's a lot happening there. We'll let Kelly Ortberg and the team at Boeing talk about the schedule for the 777X. I think their last comments talked about an entry into service in 2026. We're thrilled to be the only engine under wing with our new 9X engine. When I talk to customers, they tell me two things. They love that airplane, and they wish they had it yesterday. I think the fact that customers are very keen to see Boeing work through the development and the certification tasks that lie ahead of them is really good news for Boeing. It's good news for us because that's going to be a heck of an airplane once it enters into service.
Airlines like Cathay have expressed a disappointment. I mean, is there a sense, are you confident 2026 is actually viable? That's
the plan that we're working on with Boeing. We know that's the plan that they're working on with every ounce of energy and dedication that they can provide.
You talked about your 9X engine. It's been problematic as well. There are a few challenges there. There have been cracks. Can you talk us through what is happening, what the root cause is, and how are you trying to fix it?
I think you may be referring to a piece of equipment that is attached to the 9X engine, which is a Boeing supplied part, not a GE Aerospace supplied part. So the engine has performed very well over the last several years. It was certified back in 2020. There's plenty of work that we still need to do to be able to ramp side by side with Boeing. But in terms of the core integrity of the engine, we're in very good shape.
So you're saying that it is not on GE to fix the problem, it is on Boeing to fix that problem?
I think the crack that you're referring to is a function of a Boeing supplied component, not a GE engine.
When do you see testing resuming for the 777X? Is there a sense that you're getting in your conversations with Boeing?
That's really for Boeing to speak to publicly in terms of the schedule for that, the resumption of that testing.
Larry, earlier you talked about how you're optimistic about the outlook for the aviation sector. Talk to us about the kind of demand you're anticipating and which region is driving that optimism.
Well, I think it's really a global phenomenon as people have traveled more and they've been keen to travel all the more post the pandemic. We're seeing the airlines work their assets, fly those planes like never before. And at the same time, we're seeing airlines around the world, but particularly here in the Asia Pacific region and in the Middle East, looking to expand their fleets of both narrow bodies and wide bodies. That's all good for the industry, and why I say that this will really be a demand-driven challenge, a challenge we happily accept for the rest of this decade.
Can you put a number to it? Are you as optimistic now as you were at the start of the year, for instance?
Certainly more optimistic, again, because we see the flying public continuing to fly. Just the comments from the airline CEOs the last couple of weeks in conjunction with their earnings calls has reiterated that bullishness. And every customer that I talk to that has planes on order, be they Airbus or Boeing airplanes, are very keen to see those planes delivered and those planes added to their fleets.
So what, Asia versus Middle East versus Europe? I mean, in terms of growth?
Well, certainly Asia Pac and the Middle East, I would say, is outgrowing what we're seeing in North America and in Europe in terms of new airplane deliveries, and probably also at this point in terms of traffic increases.
Are you concerned about growth because the IMF has just cut its growth projection for the year? We've seen countries like China, for instance, undergoing a sluggish economy, having great difficulty in turning around its economy. Is that impacting the kind of demand that you're anticipating?
I think at this point we don't really see those economic concerns directly materially impacting demand in our industry. Again, because the life cycles of these machines are so long, the order books really reach out into the next decade. Now that could change, and we're not either oblivious or completely immune from some of the economic pressures that people are concerned about. But at this point, we really think that we have a strong undercurrent of demand on both the new make and on the aftermarket side, which should continue for the foreseeable future.
When you speak to leaders in the business world, a lot of them say that one of the risks is actually the U.S. election. How are you assessing that risk to your business?
Well, we'll have an election here, a week from Tuesday, and we'll get on the other side of that. GE has worked with both Democratic and Republican administrations for over a century. So whatever the outcome, I know, having been born in Washington, D.C., that we'll move forward as a company, and we will work with whatever administration's in place as we have over the last several decades.
So it doesn't matter who the president is. It doesn't matter if it's Trump and his plans to impose tariffs on China. That does not impact how you view your business, does not impact your strategy.
Well, I think that we'll see how the winning candidate moves forward from a policy perspective. I'm highly optimistic that we'll work constructively with whoever wins the election.
I'd like to touch on China. It has big ambitions, COMAC C919. So far, we've seen orders of about 300 coming from the big Chinese carriers. What do you make of that number?
Well, it would suggest that the Chinese carriers like that airplane. We'd like to think one reason they like that airplane is because we have our LEAP 1C engine under wing, sole source in that regard. And I think COMAC and the Chinese are quite serious about their intentions with that airplane, and that demand that you just cited really is the beginning of the market acceptance of that aircraft.
Do you think it can be a game changer? Do you think it will reshape the landscape in the aerospace business?
Well, I think that we will see over time how successful COMAC and the market acceptance of that airplane is, but it would be very foolish, I think, to bet against COMAC and their customers.
What are its biggest challenges?
Well, I think any time that you bring a new aircraft to market in a marketplace as complex as ours, again, as we were talking earlier, there is not only the ramping of the supply chain to produce more of those airplanes every year, but the regional and ultimately the global support network that those airplanes will require. That's a serious undertaking. I think COMAC understands that clearly and will do everything they can to master that challenge.
Larry Culp, we thank you so much for your insights today.
This is Bloomberg Daybreak Asia, your morning brief on the stories making news from Hong Kong to Singapore and Wall Street. Look for us on your podcast feed every day on Apple, Spotify, and anywhere else you get your podcast. Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. Plus, listen coast to coast on the Bloomberg Business app, Sirius XM, the iHeartRadio app, and on Bloomberg.com. I'm Doug Krisner. Join us again tomorrow for all the news you need to start your day right here on Bloomberg Daybreak Asia.